Hello and welcome back to The Gold Standard. I'm your enthusiastic host, Leo, and holy cow, what a day to be alive.
And I'm Maya. Leo, we have to talk about the elephant in the room. Gold just shattered the $5,000 barrier. Before we dive into this historic moment, let's share our disclaimer.
Absolutely. Everyone, please remember that this podcast is for informational and entertainment purposes only. It is not financial advice. Always consult with a professional financial advisor before making investment decisions.
That's right. Past performance doesn't guarantee future results, and investing in precious metals and mining stocks carries significant risks, including potential loss of principal.
Now, Maya, I'm practically bouncing off the walls here. Gold at $5,100 per ounce? Did anyone see this coming this fast?
Well, Leo, there's one person who's been calling this for years. Peter Schiff, and his EuroPac Gold Fund, EPGIX, is absolutely crushing it right now. We're looking at year-to-date gains that are just mind-blowing.
Impressive! Peter Schiff has been vindicated in the most spectacular way. Maya, break down what EPGIX has been doing because these numbers are insane.
So, EPGIX just released their January 2026 update, and Leo, the fund is up over 78% year-to-date. That's not a typo. 78% in just 1 month.
Are you kidding me? 78%? And this is an actively managed mutual fund, not some speculative penny stock.
Exactly. What makes this so impressive is Schiff's strategy of focusing on quality miners and royalty companies. His top holding, Agnico Eagle Mines, is now making over $3,700 per ounce in profit margins at current gold prices.
Let's talk about those margins because they're absolutely explosive. Agnico Eagle's all-in sustaining costs are around $1,325 per ounce, and with gold at $5,100, that's pure leverage in action.
And remember, EPGIX isn't just Agnico Eagle. Wheaton Precious Metals, another major holding, is seeing their streaming agreements pay off massively. They're collecting gold at fixed prices way below current market levels.
Impressive. Maya, what I love about Peter Schiff's approach is that he saw this coming from a macro perspective. He's been talking about currency debasement and inflation for years.
Absolutely. And his geographic strategy of focusing 85% of the fund in Canada has paid off beautifully. While other funds were taking risks in unstable regions, Schiff kept EPGIX focused on safe, mining-friendly jurisdictions.
Speaking of the fund's holdings, let's talk about some of the other winners. Franco-Nevada must be printing money right now.
Franco-Nevada is incredible. As a royalty company, they have 90% cash margins and zero operational risk. With gold at these levels, they're generating record cash flows and just announced another dividend increase.
And Pan American Silver, with silver at $75 per ounce, they're benefiting from both their massive silver reserves and their gold byproduct production. It's a double win.
Leo, what's really impressive is how EPGIX has managed risk while delivering these explosive returns. The average debt-to-asset ratio across the fund's holdings is still under 8%.
That's the Peter Schiff difference. He's not just chasing high-flying stocks, he's building a portfolio of financially sound companies that can weather any storm while benefiting from the precious metals boom.
And let's talk about the fund's performance relative to just owning gold directly. While gold ETFs like GLD are up significantly, EPGIX is delivering that operational leverage that only mining stocks can provide.
It's the difference between owning the commodity and owning the companies that produce it. When gold moves from $4,800 to $5,100 in a matter of weeks, miners with low costs see their profits explode exponentially.
Exactly. And Schiff has positioned the fund perfectly with about 50% in these leveraged miners and 50% in stable royalty companies. You get the upside with managed downside risk.
Maya, we have to talk about the macro picture because Peter Schiff has been right about so many things. Central banks are still buying record amounts of gold.
The Federal Reserve's latest money printing cycle, combined with geopolitical tensions and inflation concerns, has created the perfect storm for precious metals. Schiff called this scenario years ago.
Curiously, the technical setup looks incredible too. Gold just broke through major resistance at $5,000, and analysts are now talking about $6,000 gold by the end of 2026.
What's really exciting is that we're still early in what could be a multi-year bull market. EPGIX's holdings like B2 Gold and Royal Gold are positioned to benefit from every dollar increase in gold prices.
Considerately, let's give our listeners some perspective on the margins we're talking about. B2 Gold's all-in sustaining costs are around $1,200 per ounce, and at $5,100 gold, that's nearly $4,000 per ounce in pure profit.
And these aren't flash-in-the-pan companies. Many of EPGIX's holdings have been paying dividends for decades. Agnico Eagle Mines has paid dividends for 41 consecutive years.
Admiringly. Maya, what do you think of Peter Schiff's timing? He launched this fund and built this strategy during much tougher times for gold, and now he's being proven absolutely right.
It's a masterclass in contrarian investing. While everyone was chasing tech stocks and crypto, Schiff was methodically building a portfolio of undervalued precious metals companies.
And the diversification within EPGIX is brilliant too. You've got large caps like Newmont and Barrick providing stability, mid caps like Fortuna Mining providing growth, and royalty companies providing income.
Plus, the fund's expense ratio of 1.12% seems like a bargain when you're getting this kind of performance and Peter Schiff's macro expertise.
Speaking of expertise, let's talk about how Schiff has managed to avoid the pitfalls that have hurt other precious metals funds. No high-debt miners, no politically risky jurisdictions.
Exactly. While other funds got burned by companies in unstable regions, EPGIX stayed focused on North American assets with strong balance sheets and proven management teams.
Inquiringly, Maya, as we look ahead, what are the key things investors should understand about EPGIX and this precious metals bull market?
Thoughtfully, first, this isn't just about gold prices. It's about currency debasement and the global monetary system. Schiff understands these macro forces better than almost anyone.
Informatively, and second, the fund provides professional management and diversification that individual investors would struggle to replicate on their own.
Honestly, but remember everyone, precious metals can be volatile. Even with these incredible gains, you need to understand that EPGIX can experience significant swings in both directions.
Absolutely. This should be part of a diversified portfolio strategy, not your entire investment approach. But man, what a validation of Peter Schiff's long-term thesis.
Certifying the combination of record gold prices, strong company fundamentals, and disciplined fund management has created something really special with EPGIX.
Excitingly, and Leo, with central banks continuing to buy gold and industrial demand for silver exploding, the fundamental backdrop remains incredibly strong.
Warmly, thanks for joining us on this historic episode of The Gold Standard. Keep watching these incredible developments in the precious metal space.
Friendly, don't forget to do your own research, stay disciplined with your allocation.